All right.
Guys, you're doing it.
Okay, we're live, right?
Yep. Let me get my ugly mug off. Hang on.
Okay, good evening, everybody, and happy Thursday to you. Mainly this is going to be about what Rich is up to, but I just want to talk a little bit about the S&P and what I've kind of gathered, and they're pretty logical, I think, and I think Rich will agree. We've been pretty bullish, and the market keeps going down, and I think this has a lot to do with the S&P being up so much. I think it's Rich would maybe know the stats, but I think was the best April at its highs since the 2008 credit crisis. Now, what's changed? Well, I think what changes, and it's something that the pit bulls taught me a lot about, is when you come after a big month up and you go into the end of the month with big gains, the mutual funds or ETFs have a tendency to take profits. And we've clearly seen that on the MOC orders and imbalance orders over the last 3 or 4 days. But aside from that, what I really think is, hold on 1 minute, Delilah, no. Yeah, I can't do much about that. But anyways, Delilah, don't talk. Watch TV. Come on. And one of the things I think is critical about this that's changed is the yields. And I think that the yields will ultimately, if they keep rising, be the death of the S&P. Now, I know we're still looking for a good push into the end of the year. We're still up like 9.5% in the S&P. So we're not really getting killed. We're just going down. Now, obviously, tomorrow we've got the critical number coming out. I think there's going to be a lot of play into that. But again, I get the feeling that there's just a lot of liquidation going on. And one of the things that the Pitbull said a couple of days ago to me is that he said that the country is going broke. And we talked about this, I believe, the last time we were on, that right now the debt payment from the Fed for its interest payment is now larger than the U.S. military budget. And things are spiraling out of control in that regard. And I don't know how this is going to all turn out, but I've always thought you can't continue to pile debt up with high rates and have the market go up forever. Obviously, an election year is different. Today, or the last 2 days, I think they were identical. The S&P opens lower, it pulls back a little bit, and then it rallies, and then boom, late in the day, after 2 or 2:30, we go straight down. And then obviously, the headlines about Trump and being convicted on all 34 counts. Now we're going to leave that alone. That's got nothing to do with what we're here to talk about. And what we're going to do now is we're going to turn it over to Rich. He's got a couple topics to talk about, and we're going to make this short and sweet. Rich, take over if you would.
Thank you, Danny. Am I sharing my screen now? If Marlon will, there we go. Yeah, you were just talking about I know we've both been really bullish. Here's the bonds up the top, and the bonds, they climbed with the rally that we started last November, and in the stocks, the rally didn't end until April before we had that pullback. But the bond rally ended, right there at the beginning of the year, and they've been trending down. And even when we made that low last month in April, the bonds bottomed here, and we went on to make new highs, and the bonds never made new highs. Their new highs are up here, so the market is definitely disregarding that right now. But at some point in time, I got to think if we were following the bonds, we should be back making the same lows that we made a month ago, but they aren't giving that up yet. We'll wait and see. I'm still bullish towards the end of the year. The bonds still have a possibility of coming back, but let's look at some other stuff real quick. Now let's move on to the cryptos, because I've come with crypto sheets today. And this is what my crypto sheets look like. I'm following the Bitcoin, and then I'm following the IBIT and the FBTC. Those are the Bitcoin ETFs. and then I have the minis or micro Ethereum and micro Bitcoin, and then there's the Ethereum, and I'm putting out the standard deviation levels, and I have other things, these other tools, these intraday range tools and daily range tools, and I have some videos and explanations of how these work and how you use them going into trading the cryptocurrencies. I've got a couple other tools that I have not published yet, but I have them done. I'm going to add those in the near future. But just to show you one of the things that is definitely this one of the guys that follows me took a look at today's my today Bitcoin sheets and use the 1.5 standard deviation levels. He put the 1.5 standard deviations. I have 1 and 2, and he did the half one, and the market came almost exactly to the 1.5 level in Bitcoin. We know these are really volatile, and then it backed off. But he said what he's been watching my sheets now because he's been an early entrant to using my sheets, and he's found out that these half standard deviation levels work pretty good, and he just can calculate them off the levels that come right off my sheets. So I'm encouraged that we picked out the right times to mark our levels from, and they seem to be working. I've done this a little bit on my own, but this HR is working that out, every day. And I'm eventually, if it works that way, I guess I'm going to have to put in the 1.5 levels, but we'll see. Meanwhile, people can calculate those and see what's going on there. The other thing that I'm doing right now, and this is really exciting to me, is I'm automating my algos, and I've got this. This is my basic gap stat sheet where I start out from every morning. And I'm adding in a lot of data here. I'll have this done by probably tonight, but and it's a lot of data that is statistical data that can give you definite edges in trading, and this all leads up to using my morning gap stats to make an early morning gap trade. And I just hooked up this to a live data feed, and I think that should be grabbing it right now. Let's see where we are. 4250, 4275. It's like a tick behind right now, but this also only updates right now every 5 seconds. I stepped on it kind of slow to see that it would move everything and change things. And this will automatically update all my algos. So in the morning, I'm very excited about this because by Monday I will be running this every morning live, and I have been doing it mechanically, myself for a long time. But once this is live, it will take a lot of work and effort off my hands. There's a couple of things I want to change about the feed right now, and I'm working on changing that. But this is all part of bringing my algos live, and this was the first one I've automated. And once this one is automated, and I don't think it's it's only a 2-tick wide market right now, so it's really not even updating, doing anything. But once this is automated, I have like 4 other algos to follow, and I'm going to stop this real quick because when I jump to the other pages, the other algos start working. One of them will start working early in the morning, and it will give besides the opening gap trade stats. And these are what my opening gap trade stats look like right here. I'm actually redesigning this page too. So these, based on it goes through the decision model to tell what this is. I have 4 pages of gap stats for ES and Q. And in the morning when you come in, as I say, off that feed, it automatically changes the gaps to tell you whether what the probability of filling them is, what the probability of going to the prior day's high is, or the prior day low. And if it's a partial gap, it gives different stats, and they work as just with these exact percentages they show. So 70% of the time, if something's going to fill, that's what it does, and that's what these are designed to help enhance your trading decisions, not necessarily totally make them. So if you can see the market moving in that direction and know you have a 70% probability of it doing so, obviously it would be a trade that would be more attractive than doing something that has a 50% probability, because those you leave alone. And there's times on some of the smaller gaps when you can get 70 or 80% probabilities or even higher. And that's where I started doing everything. These are kind of blank right now because I'm updating the program, but that's where I started doing everything, looking at gap stats. And I've subsequently moved into, because I found so much out about what I was doing, that I've discovered, a lot of things about market movement that signals what's going to, happen subsequently with pretty great reliability. And I'm excited about, finally automating these things. I got to a point where, that's possible. And I will always be improving everything I'm doing, but I'm very excited about it. And as they develop, obviously, if they do everything that they've been doing so far, they will add a great amount of success to anybody's trading. I kind of analogize it to one of the things I like. I used to be an active pilot. I look at it as like instrument flying. These algos are, instruments. And if you learn to trust them, there's times that you just will avoid, going against what the algos say, because if they say the market's going up, you certainly don't want to sell in front of something that's that way. And sometimes there's really strong indications from going on. And if the market, likewise, if the market's going down and it's got a strong indication of going down, you don't want to be trying to buy it. And you go with the trend. And that's what I've really tried to develop here, and am continuing on, working that way, because I want to catch trends for the day. I don't want a tick. I don't want 2 ticks. I want dollars. I want to catch a trend that's going to go on for 2 or 3 hours or more. I want to catch the whole day trend, and that's what I'm working for.
Hey, Rich, real quick. It's been pretty hard to catch those things recently, is it not?
Well, recently, because we've had real small ranges, and my range analysis. I mean, it's been a choppy market. There's no question about it. And when you get more volatile, though, when volatility increases, which I'm sure it will later on this year, it was kind of volatile this spring. We had reasonable volatility, and when you have reasonable amounts of volatility, the market actually trends about 32% of the time. And my description of a trend is that during the regular trading hours, that's when the cash markets are open, the market will move 1% or more, from the open of the market to the close of the market. And I as I say, I describe those as trend days. And whether they're up or down, and I have all the stats on how often they're up and how often they're down, but 32% of the time we have those 1% trend, range trend days, and that's a lot of days. So there's a lot of opportunity. Every week you should be getting 1 to 2 of those days a week, and if you get one or two of those days in the S&Ps where you've got a 40 or 50 point range, and you're catching, a good chunk of that trend. It's you don't need to trade the other days.
Well, the other thing, one of the things I've been looking at, and I haven't been paying attention to it, but the VIX was up 8% yesterday and up 1.13% today. So there is something going on here, right? I mean,
Well, generally when the market goes down, the VIX goes up because that's, quote unquote, the fear index. But it goes up for, the fact that when the market goes lower, it's naturally in the equation of volatility. It's naturally increasing volatility anyway. So to have it go up, but it's still trading at pretty low levels. I mean, I did a study and that's available for anybody who joins. I've got about 30 or 40 different studies up, and one of them is on volatility and addressing the issue of what constitutes low volatility and what constitutes high volatility. Right now, we're at the lows of the volatility range, for the last bunch of years since volatility has been kind of tracked with the VIX. And we're at the low end of the range, and will it go up? Yeah, when the market goes down a little bit, it'll go up. But I think we're still headed higher at some point in time this year. We obviously are experiencing some weakness in the bonds and the notes right now. And as I just showed that chart at the beginning of this webinar, and realistically speaking, I mean, we should be down a lot because the bonds and the notes are down on the lows, the same lows that they were at when we made the low, a little over a month ago, and we're still a few hundred points above that. So
for crypto traders, they'll be able to see the same stuff that you're doing, the live data stuff going through the numbers, right?
Well, the cryptos, I haven't done any gap studies on the cryptos right now. What they will see is just my sheets, and eventually I'll probably have a program that tracks cryptos. And I have not I've had a lot of people ask me because my standard deviation levels are really so good. I had a lot of people asking me to do some crypto stuff, and I've done it. And apparently, from the initial feedback here, that the standard deviation levels are working pretty well. So to add, there's a couple of programs that I do have, and once I automate, first I'm going to start out with these stock indices, and I'm running ahead of schedule now. Actually, I didn't think I would have this done till the end of June, what I'm working on right now. And now I think I'm going to have it done by Sunday night.
That's great.
So, and then the other three should follow in quick succession. Well, one of those programs, one of those algorithms is something that can be applied to cryptos that can track it during the day. And I will, as soon as I get it working and up and running here in the stock indices, then it's just a small move to put it on the cryptos. So and when I get those algos running, all my prices are going up. This is the initial start. So anybody that's in before then is going to kind of be grandfathered in for a little while. And I'm thinking that I will have all these algos running by the end of June. Right. I didn't think I was. I have a just I top secret, but I have a college student working for me this summer, and he is absolutely fabulous. He's really doing some great. He's coding in Python to automate this stuff, and to hook up the data feeds to the spreadsheets, and he's doing a great job. And he's done a lot of stuff that is pretty remarkable in a short period of time. Very short, a lot. I mean, I thought we would be working on what we're working on for like 5 or 6 weeks, and he's got it done in like 2. So,
well, let's kind of, as we said, we're going to make this one short. I just got a question for you. We're going into PCE tomorrow, and then next week we have the jobs number. Do you see any redeeming qualities in the way the markets trade right now?
Well, I actually see the possibility that bonds and notes could turn back up, and the stocks have been exceedingly strong, exceedingly strong. I mean, with the notes and the bonds being here at the April lows, we should be a lot lower, and we aren't. And I think if the stocks or if the bonds and the notes turn back up, we are absolutely headed to new highs rather rapidly. I mean, I thought it was going to be. I didn't think that the bonds and the notes would, go down like they did. I thought they were going to hold and turn higher, but they haven't. And if they go down lower, it's absolutely going to drag the stocks down lower. If we move sideways for a couple of days here and then turn back up, or start turning back up at any point in time, the stocks are absolutely they want to go higher. There's just no two ways around it. They want to go higher. They've held really well up to this point in time, and unless the bonds and the notes continue down, then at some point in time the stocks will have to throw in the towel and go lower. But if the bonds and the notes turn from here, we're going a lot higher.
Yeah,
quickly.
All right. Well, listen, let's do this. Let's tie it up. And thanks for coming in tonight. And like I think you said something about doing a real webinar like on a Saturday or something. So what we can do is we can try to get something out. And that way we can get a little bit more in depth with what's going on. But I want to thank everybody for coming in tonight. And as we said, we're going to try to keep it short, and we'll see you on the rebound. Thanks a lot.
Thanks, Danny.
You got it.
Thanks, everybody.